All right, good day, guys. How y'all doing? Hope you all are good. Okay, so today we'll be discussing a few things, and I want to say, uh, at where price is across all currencies, I do see a mega trade coming up, unfolding, and we may ask, what's a mega trade? A mega trade, it's a trade that comprises of a range of 500 pips to 1,000 pips in price. And a whole lot of insight actually came from the fundamental side of things. So, talking about the fundamental side of things, when we talk about fundamental side of things, we talk about open interest, commitment of traders, and also the interest rates. So, the what will be fixated or what will be more focused on today is open interest. That is, will be you making use of the open interest to actually be able to determine what could go on in the marketplace. And a lot of you might be asking what is actually the open interests or what the open interests are. And the open interest actually is the total number of outstanding contracts that are held by market participants at the end of the market trading day. Um, and one of the ways we use open interest as a trading tool is in two ways actually, which is one we use it as a measuring tool to be able to measure the strength of a trend or a price move, and also to track the footprints of large commercial hedges. Um, okay, let's get down to business. So I would like to talk a little bit more about this open interest of a thing and how it's more applicable to we in the marketplace. Uh, I will make use of a diagram on analogy. So when we see price, I'll be using the brush tool. When we see price, so I we mentioned that okay, we mentioned that the open interest is the fundamental side of things in the market, according with along with the commitment of traders and also the interest rates. So we what we have to know is that this tool is not actually the technicals. It's actually we should actually view it from different from how we view price in technicals, like how we view technicals and price. And so what we're trying to see is we're trying to watch what the technicals are doing and actually know where the money is in the market. So um we'll be putting this in type 1, type 2, type 3, type 4 till we're done with all of this. Okay, so type 1. So for instance, we see the market is buying, instance 1, while we see the open interest is also increasing progressively. Now, this is an indication in the underlying strength of the market. It's more of like this indicates strength in the continuation of the bullish order flow. Uh, in type B or scenario B, if we see price, if we see price in a bearish order flow, and well, we see open interest also increasing progressively. This is what an indication in price or an indication of strength in the continuation of the order flow. So in this case scenario where we see price return to a premium array over here, it's viewed as a retracement or is viewed as a stop out or a sweep in liquidity. Then we see a continuation then in price. And inverse for the first one I made mention of earlier. So let's move on to the next type. Type C, we'll call it type C. So in type C, let's take this line here as a premium array. I'll put it as PR. we see price moving high, then what it reaches for a premium area. And we also see the open interest moving higher, 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 until when price reaches this 3D area, we now see what a decline in open interest. Right here, this is indicative of a reversal in price. That is, at this point, you know, for every buyer there must be a seller. So yeah, we see the commercials, we see futures contract, we see the big players with the buy. Then when they get to the premium level, so that is now there. There's now a lack of open interest on being on the buy side, which is this indicative. So when they reach it, there was now a lack of interest, showing that what they on the buy side. Then afterwards they had to edge their position by what selling short. So selling short. So now why here we now what we expected what a reversal in price, reversal in price over here. So I think it's quite clear. Reversal in price over here. So another scenario. Okay, coming. So let's take this now as our discount array, the line below as our discount array. I'm coming. Uh, our discounts, I'll put D there, discount array. So we see price reaching for our discount array, while we see the open interest actually was in favor of what the next position of all the what the total buyers or sellers of the market is what makes up the open interest, which determines the flow of money into the futures contract. So we see price initially what increasing in the what we see the open interest actually increasing parabolically, and while price was reaching for the premium discount area, we see a decline in open interest. I say now the edgers, the big guys, the banks, the hedge funds, and the rest, they are all yeah they are all, they are all they all lost interest, or majority of them lost interest in where in selling this particular asset class or this particular financial instrument, why they got to this level, and therefore it brought what a decline in what open interest. So we have every tendencies from this discount array matching up with the open interest to see a reversal and what we expected what a buy. Now, in case scenarios where we see signatures like this and we see institutional swing points across all assets, where's my part two? Sorry, I'll have to change this a little. Come in. I have to take this a little bit higher. So we see, for instance, when the open interest and stuff occurs, and we see what we see an institutional price swing across different assets, just like let's say the euro and the pound, and are they are what they are they are correlated in the market price. So we know what this is. Or for instance, between correlated assets, BTC and Ethereum, the dollar, the euro, the dollar, the pound, Aussie dollar, New Zealand dollar, Aussie yen, New Zealand yen, as long as they are what's intercorrelated. So now we see institutional price swing. When we say institutional price swing, let's say this is what let's say this is our let's say this is our dollar and this is our euro. So we see the signatures in the dollar and the euro accompanied with what? This institutional price swing over here, where one is what's accumulated and the other is distributed. Then we're in for actually a substantial move in a particular direction over a long period of time, over a long period over a long period of time actually. If a substantial over a long period of time, targeting a particular direction, either bullish or bearish, all depending on your what on your narrative. It all depends on your narrative, actually. So yeah, we let's go to the next type. So I just have to explain, bring in this institutional swing points. Okay, all right. So in a case scenario where now we could also make use of open interest to know when consolidation is due for a breakout. So let's say for instance, we had a bearish narrative of price, a very bearish narrative of price. And while at that, sorry, I'm gonna delete this. So while at that, we see where's my brush tool? We see the open interest over here moving. Then we had a parabolic move in the open interest, more like a surge, and after that, an immediate what decline. Remember, this is when you have a bearish narrative of a particular asset class or of a financial instrument. So let's say you want to trade Dixie, and Dixie has a bearish narrative. Like you had a bearish narrative and it wasn't a consolidation, but now you've been waiting for the consolidation to go and you want to engage in the marketplace more of like in a trending environment. You could use this to time everything. So at this point, while we see this happening after the surge in price and a decline in the open interest, we would see price reach for a premium area and then go below the range. And this is also inverse when you have a bullish narrative of price. So let's delete this and delete this. Clear this also. So now you have a bullish narrative in price where you want price to move higher. It's been stuck in a consolidation. But while at that we see the open interest while increasing, we now saw a surge lower, and immediately we saw a reprice in the open interest. We would see price from here reach for a discount level and target higher prices. So that being said, uh, let's move on to the order of the day. We'll have to go now to the order of the day, which is the charts. We have to look at the charts. Right. Oh, okay. So guys, uh, there is now this open interest could not be viewed in. I'd like to know that this interests, the open interest could not be viewed from the CFD or the cash market. We have to go to the futures market. If you try to bring up the open interest in the cash market right over here, let's say we use euro for instance, I will try to bring in the open interest right here. It's not going to load. How do I put it for you guys? The indicators, you go to the open interest. It's only available in where? In the futures market. And one of the websites or the tools I actually use to actually check this out in the futures market is batchart.com. Batchart.com. So I've already explained the basics of what the open interest is all about. So we're just going to have a clear view of it over here. So we'll be looking now, in the market we have the benchmark and we also have the underlying. So when it comes to pairs, like I would love to use this. Where's my trading review? So when it comes to pairs like the benchmark, now okay, I'll explain the benchmark where I'll explain the underlying. So for instance, now we're trading EUR. Sorry, let's go here. For instance, now we'll be trading the EURUSD. Give me a brush up. EURUSD slash the euro. That's it. The first pair here, one. This pair here, the first side, that is one. One is labeled as what? The benchmark. Benchmark, BENCH. Use the text tool. Is labeled the benchmark, while the other over here is labeled, that is a euro, is labeled the underlying, the underlying. So for we to trade at the CFV level, which is the cash market, we have to bring in two futures contract to make a particular pair. So which is being what? Euro and USD. But these two, which is the benchmark and the underlying, stands individually in the futures contract. So now we'll be looking at the futures contract of the euro, the pound, the CAD, and also the dollar. We're looking at this four, and I'll just give my targets, my long-term targets. Remember, I said I see a mega trade unfolding and what I expect to occur in the market. All right, it's going to be quite detailed, but I hope the video will be quite short. Okay. Uh, so let's start from the monthly chart for the pound. Uh, why anytime you use the anytime you're using the barchart.com to view the open interest, always use the nearby contracts, intraday nearby, day nearby, weekly nearby, monthly nearby. So, like I said earlier, there are there are ways in which we could use the open interest to actually determine the what the strength of a particular asset, or to know whether a reversal is what's going to occur, or yes, continue in a particular what trend scenario. And I also explained what institutional swing points to you. So um now looking at this price keyed off from a key level within this order block here at the daily. I see a fair value gap. You can draw a fair value gap from here to here. I think it should be in the weekly. When we get to trading, I'll show it to you guys. So now in the monthly chart, we see a fair value gap created right over here inside of a breaker. That is this three consecutive up close candle. While on that, when when price keyed up from this when price keyed up from this PDRA inside this bullish order block, we see price, we see the open interest increasing progressively, healthy. But when we go to this level over here, we notice a decline. Even at the decline, we saw a price was still indicative of okay, yeah. We still the open interest was still moving higher. until what we wanted to make a what a lower low. Then we saw a decline in what's in open interest. Now this is what now you see now without the narrative, without the PDRA, the timing with this open interest would be very 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 wrong, very wrong because look at it, it is not everywhere that there was a decline that actually made a decline. You have to like add it up with the narrative, you have to add it up with the bias and know where this is going to. That is the only way this open interest tool will work for you. So as we see this fair value gap here, we saw price was declining into it, and while price was reaching for it, we saw what the open interest was going down. Now you remember type should be type 4 where I said when you see what price reaching for a premium array or a discount array, when there is already an underlying narrative of that, it could be what's indicative of what reversal. So as price reached for this array, this PD array over here, we saw a reversal. We saw what a decline in what open interest. Open interest began to what that is a net total of shorts in the markets over here began to decline. Began to that is saying now they were the commercial edges were now what going for longs. And looking also the COT data, looking at the COT data, we could see price is above what coming. Looking at the COT data, we see price above the quite above the 50% level. Or 50% level. Uh, this on its own is not an indicator. There must be what's narrative and price. There must be a narrative you have in mind. This is what is going to happen in the marketplace. So what we say, well, a decline. Meanwhile, the commercial edges are what are also what net bullish. While a decline in what's in bearish in what in bearish the bearish side of it was what a decline in the open interest, indicative of what a reversal, which would led to what bullishness uh in the market. So I made mention of institutional swing points over here, where okay, we'll come back to that a little later. Let's finish the open interest here. So um coming to coming to our coming to euro. Euro, after price reached for this other block, reach for this other block over here. Now, apart from this other block, let me increase the. I love to increase the. I love to increase the. I love to increase the thickness of the. Okay. Give me a black color over there. Okay, apply. Now we see price reach for this, and apart from that, we see there's also a fair value gap over there. That is from this high also to this low point price. You see now why price reach for this, we see what a progressive increase in what open interest. No decline yet, no decline. Even right inside this consolidation, there is no decline. This is what's indicative of strength in a particular what this indicative of strength in a particular direction. And let's look at the dollar. Okay, come in. Where's the dollar? The dollar, the dollar. Okay, the dollar market. Let's load. I making use of the monthly, you can make use of the daily for your own analysis and stuff. But remember that is the monthly nearby contract we're using. All right. So remember what I said. Type 5. Now you have a what bearish narrative of price. You see price in it. You have a bearish narrative of price. which is price reaching for this order block here. Let's make this thicker. Now, price reach for this here began to decline. Now, you see, apart from that, we see price is also in a breakout over here. It's a price also in a breakout down over here. Trend line. This is a breakout here. So just below this breaker, we do see price in a consolidation. But I want you to take a look at what I said earlier. Now, while in the consolidation and while the narrative is being what bearish, we when we see price increase, then what a sudden surge in price and then a decline. This is what's indicative of what. So, like I said, we're dealing with the dollar, right? So when we see what when we see when there is a narrative that is bearish or the order flow is being bearish, targeting a particular level or something, and we see a surge in the open interest and after that an immediate decline, it is indicative of price at that moment. I think the price at that moment leaving the consolidation and actually becoming bearish. That is going for more what bearish move. You can see we in the breaker, this three consecutive down close candle was swept above the high, and so far so good. We've seen price gyrating just below that, and this is quite indicative that price at the moment it wants to leave this consolidation and target lower prices. All right. That being said, that being said, let's go to the next. Okay. So while looking at the Canadian dollar, um, we see what we see price first of all. Let's start from here. Now it's a price. We took out this what do you call it? This equal low over here. So I anticipated a Poison revert late last year at the last quarter of the year, and targets right over here for this future contract. But now we see price has actually showed some willingness to move higher. And as we speak at the moment, we see price reaching for a fair value gap over here. Remember, key levels are very, very important. And while this was reaching for this, we could see, I'm trying to, how do I increase this? So, sorry, why is it behaving weird? Okay. So, why from here, which is after this gap was created and reached for this high over here, we see price declining. And why price was declining, we see what there was what an increase in what open interest. As I said that they were what willing sellers of this particular market price at this point to this point. But when we got to this one, we saw there was what a decrease. So that there was no decrease. So this is one now indicative of a reversal. So I made mention of institutional swing points earlier in this video. Okay. So um, let's look at the institutional swing points. Now now you see now it's a very detailed and very structural way. First, you have to look at what we had to what have we had to get to what the narrative. After we got the narrative, after we got the narrative of where price is going on in a general sense. We will have to look at what these fundamental tools. We have to incorporate it into our trading to make informed decisions as smart money. So now we know where the money is, we know what is going on in their mind, and now we have to bring in what the institutional swing points to use as confirmation towards our bias, our bias. So um, we use the CFD for this. I could use this to explain it, but I will explain. I'm going to show you that using the CFD, or we'll use that in the. Okay, let's use pound. Use pound. All right. Monthly chart. So I'm going to show you the institutional reference points, and I'm going to give some algo filters. That is, for this premise to be, for this Pinker trade to still be valid, it must not do this and it must not do that. It must do this and that. Oh yeah, actually, it must do this and do that. So we're looking at this from the monthly actually, and I'll be comparing um these asset classes, these financial instruments, being the dollar. Let's get rid of this. So remember, I spoke about a level in this other block, so you can go and check that in your weekly. Let's take a look at that. This fair value gap between this gap here and here. That was constitute of the price, that the price not from here to here. All right. Back to the monthly. Okay. So we'll bring in what? We'll bring in the we'll bring in the we'll bring in the euro. Let's see. It should be, let's use some scale. Dixie price scale. Blue line is okay. So the blue line is Dixie. The same price scale. The green line is what I call it. The green line is the euro, and we then have the words. So look at this now. As we see price in the pound USD, pound dollar, reaching in for this fair value gap right over here, we do not see, and we see them now, they fake out this high, this low over here, take out the low over here. And why this low was being taken out over here, now look at the Dixie, the blue line. The high over here was what's maintained. That is, yeah, was manipulated. Why yeah was what? Yeah was distributed. Why yeah was what? Accumulated. So there's an accumulation of order over here that is sending price lower. And same occurs with what? With the pound USD, where there is what? There is a distribution occurring at the pound USD, while at the euro there is also what? An accumulation sending price higher. So when we look at this, let's get rid of this. Let's look at the charts individually. When we look at this, so when we look at this, we see this is the low I was talking about here. Now you see now, this this was a fair value gap that was utilized by the pound, but we see that the euro does not make use of this, doesn't reach it here. Instead, there was what? manipulation that occurred at there was an distribution that occurred at the pound that did not occur at the euro and that did not occur at where the dollar. I don't know why it's taking this much, but we'll see. Okay, let me share this chart into two so I don't get to interrupt. It's easier to view it from here this way. Okay, so this same value gap, this is inversely correlated with pound and USD, which is Dixie. So this high here and this high here for Dixie and also for the dollar, for dollar that which has been Dixie and also for the euro, I do not want to see price reach for this level anymore. And same occurs with this. I do not see price go for that. Instead, I want to see a downfall from where price is at the moment, targeting lower prices. Let's see if this is loaded now. Targeting lower prices. Targeting lower prices. Now we see now in the pound here was what's distributed, why this was being accumulated, and here was also accumulated in the what's in the dollar also, and hence this is significant of smart money divergence or smart money to SMT divergence. So uh, we don't need to see this gap over here being filled up anymore because it has already occurred. It has already occurred at the pound USD. But instead, we want to see what a downfall from here, from this current price, from current market price, reaching for. Okay, let's go on the levels now. So that is the institutional swing point I spoke about earlier in the video. So you see what I did? I I merged the open interest with the commitment of traders according with a narrative of price, and then also um and also a target. I've forgotten actually what what I wanted to say. God help us. All right. Um. So for euro, remember I said the mega trade is a trade that comprises of what? 1,000 pips, 500 pips, and more. Um. So for euro, I I will want to see this gap over here being filled up. But I why is this stop looking? All right. So the pound, the euro. I mean, sorry, I had some interruptions I had to focus on. So the euro, I want to see price from this order block here, this order block created, reach for this level. So this is more of like my near term target, 1.27. But at the same time, I don't want to see this inefficiency over here, this fair value gap over here being filled up, being filled, and the level here it's high at 1.31602. So 1.31602. No. It's text now. One. No. Okay. I know what to do. Uh, 1.31602. Okay. that that is the lower limit of this fair value gap, 1.3162. But at the same time, here is a near-term target for the near-term target, target for the mega trade. But I do see price getting overzealous and actually reaching here, trying to fill up this inefficiency over here. And also, let's look at the dollar. See? So the dollar, right? Um, like I said, we're in a breaker and we want to see what a free fall of price from where it is now currently. Target actually at the moment is 88 big figure. 88 big figure. I think there's actually how many points right now? Remember, it's a mega trade we're anticipating. Um, it's up to 10,000 points. But even while at price, what we see over here, it's liquidity in form of sell side liquidity, SSL. So when price gets to and this has actually been where a level where this has been a protected level for a very long time. So um huge institutions such as the hedge fund and also place their stop just right below here, trying to looking at this as a continuation of the trend and stuff. So there will be a whole lot of orders down here. So I actually see price getting overzealous, and this is a fair value gap in I think in the should be in the 3 month here, 3rd month here. So I do want to see them. I do see them actually after taking out this level, getting overzealous and actually reaching out for this fair value gap right below here, right below this price here. I think I'll make this okay, right below here. So they'll reach out for that too. So for okay, we've covered the euro, we've covered the dollar. Okay, let's cover the pound. So for the pound, you know, we do not want to see this high, this low taken out over here. This low taken out over here. All right. Remember, there's where it was what's distributed y in across the is intercorrelated pairs. It was what accumulated. So we want to see what this order block over here server support. You see, it's already serving at some now already as one already. We want to see this order block server support to push price to 1.45 big figure, but I at the same time price takes out liquidity over here. So we at the same time might also see price reaching out for the the rejection block over here, and overall the liquidity right above the swing high here, the swing point here, and this will be 1.5 big figure thereabouts. Yes, 1.5 big figure, 1.5 big figure. But here is our near term on the mega trade. For this, I really don't want to see price go below this the low at 19th of January. Instead, I want to see this as a protected high, and all of this neglected, and price books itself within this range. That is from this high to this, from this low over here to this high. Price books within this range and finds supports to reach for higher level. And this is same across all assets, across all financial assets, such as the euro and also the dollar. I want to see this low here at 19 being protected. Why price books within the range from this from this low here to this high, and price higher. We do not want to see, for this premise to be very much valid, we do not want to see the low below 19th Monday of January 2026 being taken out. Okay, so for card, we here per January VAT, we took out a high equal low, and we see now we're back into the dealing range. Now we see price here after an impulsive move lower came back and came back towards a fair value gap within this, and you will see it was actually refined to the daily charts. I refined it here to the daily chart where it was being refined here to the daily chart. Price came back to an order block over here, and we could see so far we could see sponsorship on going lower. So what I want to see in this pair actually is from the current market price, we do not want to see again the high above 19th of January 2026 being taken out. The high above 19th of January 2026. Okay, not the high 16th of January for card 2026 being taken out. Inside, we want to see a book down. Want to see price fall down towards the sell side level. This is going to be our near term. Our near term for card will be 1.3 big figure, 1.3 big figure, 1.3 big figure. That's our near term. Yeah, while overall term will be at 1.90 big figure. I'm just making use of 1.9. Just if you're making use of a big figure, key levels 1.90 big figure. So once the price from this order block here over here, this monthly order block, which we've seen a reaction, book price lower, first target will be 1.3 big figure. Then we could see from the weekly that it was actually a fair value gap and another block, a monthly order block, then a weekly fair value gap. So I'm gonna delineate that. Yeah. So from here, we want to see price go lower. So most likely we see support from this beefy candle over here, and we see resistance from this beefy candle here, acting as an order block, bearish order block to send price lower for card, targeting the near term over here at 1.3 big figure. And if you look at it, if you can look at it, we could see some trend line phantoms. Let me delineate that also. Some trend line phantoms over here. All these liquidity points, all these are liquidity points. So trend line phantoms are trend line phantoms. So we want to see all of this taken out to this point here. All right. So that is that, guys. Uh, I will be leaving a link to my Telegram channel where I actively post intraday trades on based on this bias, based on this narrative. I post intraday trades on the Telegram channel and also on my Twitter. So I will be leaving the link in the description of this video, guys. So do well to join and also subscribe to the channel to serve as a term of support for me to keep doing this, guys. So I'll speak with you guys later. Good day.